In the next 12 to 18 months, Nvidia may become the most valuable tech company in the world, according to Dan Ives, managing director of Wedbush Securities. When asked if he believes this will surpass Apple and Microsoft, he predicts a rise to $4 trillion, and at that point, he believes you'll be looking at Apple, Microsoft, and Nvidia. However, if you look at this AI revolution, the godfather of AI Jensen, and where this is going, we could be looking at Nvidia as the most valuable company in the world. How do we get to this $10 trillion? Will NVDA surpass its current valuation as the most valuable firm in the US, or will these other tech giants rise in tandem with it? Yes, and let me also remind you that I said years ago that Nvidia will overtake Apple to become the most valuable business in the world, and now it's closing in on that prediction. The thing about Nvidia that sets it apart from companies like Apple or Microsoft is that, as you can imagine, it's powering AI infrastructure. This is crucial to comprehend because Hopper architecture brought us to approximately $90 billion in data center revenue. Nvidia is also working quickly to release Blackwell, their upcoming architecture, which will be available before the end of this year. That by the end of the fiscal year 2026 or calendar year 2025, we believe can enable us to build a $200 billion data center. This means that Blackwell, the next generation of computers, will either match or slightly surpass Hopper in terms of capability because it will enable trillion-plus parameter large language models, which is precisely where big tech is aiming to go. Together, those elements make up a sizable hardware data center market. Next, software is coming, which I could go into great detail about here, but I'll just touch on the essentials. Finally, there are a lot of things coming up for the automotive market, which is very early for Nvidia and has multiple layers. Dan Ives of Wedbush Securities stated in a recent interview on CNBC's Last Call that Nvidia, Apple, and Microsoft are in the lead to reach the $4 trillion market capitalization. Mark believes that NVDA will emerge victorious in this race, stating that he believes the company will become the most valuable tech company in the world within the next 12 to 18 months. Meanwhile, the IO Money in this video will discuss why these analysts are so bullish on Nvidia and whether the company can actually meet these lofty goals. Beth Kindig has been outspoken about her bullishness on the company, claiming that it will surpass both Apple and Microsoft and reach $10 trillion in market capitalization by 2030. In addition, we'll give you 3 reasons to purchase Nvidia stock before it splits in June. However, before we do that, if you'd like to stay up to date on the most recent developments regarding Nvidia and the stock market, please subscribe to our investing tutorial channel. This way, you won't miss any of the biggest market shifts or catalysts. All right. Back to today's video. What would you say to Deepwater Asset Management Managing Partner Gene Munster? I predict that it will be Apple. Dan, I'm almost there because I have so much respect for you. But in my case, Apple, as I examine the second derivative, I must first give Nvidia full credit. Jensen is, after all, the godfather of AI. But the X factor in this case, Brian wants to know which stock will perform better in the upcoming year. I continue to believe that the majority of investors are unaware of the potential of Apple's artificial intelligence. And if you kind of fast forward to what we're going to witness in a few weeks, you can probably infer what it implies for the company's future year. While I agree with some of Gene Munster's opinions, I find it difficult to agree with this one. As of the time of this video, Nvidia's market cap is around $2.8 billion, while Apple's is $2.9 billion. Nvidia's market cap hasn't been this close to Apple's since 2009. Additionally, keep in mind that Nvidia wasn't even worth $1 trillion a year ago. I actually think you'll see better performance from Apple here. Thus, even Dan Ives, a longtime Apple bull with a $275 price tag, acknowledges that this is significant growth as a result of weak iPhone demand and fierce competition from Chinese smartphone companies. Target on Apple stock believes that Nvidia will soon surpass Apple as the most valuable tech company in the world. Previously, Apple stock was seen as a must-have, but in recent months, it has underperformed other major tech names. Falling about 2% this year, Earlier this year, Microsoft surpassed Apple as the most valuable company in the world, surpassing Apple thanks to gains made by early investments in AI across its cloud services. Additionally, Apple has lagged behind rivals Microsoft and Google in incorporating generative AI into their products. It appears that Apple is collaborating with OpenAI to incorporate generative AI elements into the forthcoming iPhone. But will this be sufficient for the business to surpass Nvidia? In a recent interview with Fox Business, Let's Learn out even though Nvidia stock is currently trading above $1,000, according to CEO of wealth management firm Strategic Wealth Partners Mark Tepper, the company is still undervalued. The analyst pointed out that when you consider the growth prospects for AI and machine learning, Nvidia's price-to-earnings to growth ratio is actually cheap, and predicted that the company will undoubtedly overtake Apple in terms of market capitalization by the end of the year. This isn't too unlikely, in my opinion, given how quickly Nvidia is growing and the numerous reasons why analysts and investors are enthusiastic about the company. Let's look at the 3 reasons why we believe Nvidia stock is a good investment before it splits. Check out some of the other names in the chip sector hitting all-time highs today. Nvidia and the AI-powered rally are showing little signs of slowing down, with the chipmaker hitting an all-time high and the Nasdaq closing above 17,000 for the first time. Nvidia is up nearly 20% since its earnings report just last week. Investors should not depend on Nvidia to continue pushing the market higher in light of the success of Micron, NXP Semiconductors, Qualcomm, and Texas Instruments. When questioned by CNBC contributor and Fundstrat's chief of research Tom Lee, when asked if he was still bullish going into June, Tom replied, "It has been one of those years where investors have been hesitant all year, and I think we have had some short pullbacks. You mentioned that there was too little invest confidence and too much cash on the sidelines, but it seems like it is flowing in now. How do you invest and avoid getting burned by volatility?" he asked. However, I believe the best course of action for investors is to simply continue with what is effective. You know what's working in this market right now. AI-related names like Nvidia or highly correlated stocks like Cadence or Supermicro. You know about the Olympic-related trades. You know about the strong performance of industrial and financials. You know about the growth of small-cap stealth rally, and so on. For the first reason, we believe that Nvidia stock is a buy before it splits. Spoiler alert, it's not as expensive as you might think. The value is a contributing factor in the large number of people who have refrained from purchasing the stock despite Nvidia's astounding achievement. But consider it this way before Nvidia released its first quarter results. As a result, it traded at 35 times ahead earnings, which is less expensive than Microsoft's 36 times forward earnings trading. Nevertheless, Nvidia is expanding faster. It's also important to remember that when a business is revolutionizing a sector, like Nvidia, it can be challenging to value a stock due to the many unknowns. However, with the changes AI is bringing about and the substantial infrastructure required to carry them out, Nvidia will continue to prosper, making stock valuation less significant. The company's dividend is the second justification. It was previously announced that Nvidia would increase its dividend by 150%. Prior to this boost, the company paid shareholders $0.04 per share in a quarterly dividend, which equated to a 0.016% yield. As a result of the increase and the stock split, Nvidia will now pay investors $0.01 per share every quarter for a 0.04% yield. While this may seem insignificant in comparison to other companies, it is still the starting point for a much larger payment down the road. This is because demand may eventually decline and Nvidia can raise its dividend to a meaningful amount. For the third reason, we have the phenomenal growth of the company's largest segment, data centers. As you may already know, Nvidia's main products are its GPUs, which handle intense computing workloads and are therefore great for training AI models. The global data center market is expected to increase to a valuation of $622 billion by 2030 from $31 billion in 2023. In March of this year, it was reported that Nvidia had 65% of the data center AI chip market. However, when it diverts its cash flows to return capital to shareholders, it has thus far been correct. Since Nvidia is the market leader in the AI accelerator space, which tracks the revenue of accelerator products, it could profit greatly from the anticipated growth. If it can hold on to its current share of the $39 billion AI accelerator card market, which it owns with a record 97% market share in 2023, up from 96% in 2022, the company could generate $44 billion in revenue by 2030. Put another way, Nvidia's business isn't going to slow down anytime soon. CEO Jensen Huang even referred to this as the next industrial revolution, noting that businesses and nations are now collaborating with Nvidia to develop new kinds of data centers, or AI factories, that will generate artificial intelligence, AI, a new commodity. I appreciate you being with me the entire time. These videos take a lot of time and effort to make, so if you like them, please hit the like button and subscribe to the channel. This will help us grow. Now back to the video. We want to continue our conversation about the Wealth Alliance and Neil Kasheri. Seth Cohan, for example, is the Vice President and Executive Director of the Wealth Alliance. When asked about his thoughts on the big picture, he shared with us what he knew about the speaker. Big thinking, he says. It's an Nvidia. Currently, at least in the short term, it appears that the Nvidia market is being driven by momentum and a great deal of FOMO, which is concentrated around the 7 largest stocks. It is also impossible to ignore the current investor psychology and their desire to enter and maintain this market. And I believe that's where we are at this moment. Currently, I believe there are folks who may have had some FOMO and said something like, "Look, Nvidia is doing so great, it's been amazing. I want to get in, but it's run up so much," or anything like that. Today, it set new highs. Therefore, even if someone entered the market later than others, they are still profitable, so who knows? Perhaps some of these magnificent 7 will be wise investments in the upcoming years. After all, Nvidia has increased by 129% year to date. Yes, well, let's not discuss this for the ensuing few years. I believe the market we are in now is talking about a slightly shorter term. But even so, I believe that given the level of interest in artificial intelligence that is currently present and unquestionably a real thing in the market, we will see this expanding and spreading to other stocks as well. In fact, any company that mentions Nvidia or artificial intelligence seems to be doing better right now. So I believe we see Nvidia. I'm not sure where we are at the present, but it was above 1,100, and I believe we can easily reach higher numbers before the split. That we're going to witness, and I believe that some people want to keep investing in Nvidia as well as some of the other stocks. AMD, for instance, had a slight scare last week, but it has since recovered and is doing very well. So I think the fear of missing out is unquestionably 100% true. What I'd like to see, though, is this narrowing a little bit more than it is at this specific moment. None of the reasons we mentioned have anything to do with the stocks buying at the moment. Please share your opinions with us in the comments below. As we wrap up our exploration of why Nvidia is poised to become the most valuable company in the world, it's clear that the company's innovative edge and strategic positioning in several high-growth markets are key drivers of its potential. Nvidia's dominance in the graphics processing unit, GPU market, which is essential for gaming, data centers, and artificial intelligence, AI, provides a robust foundation for its continued growth. The company's GPUs are not just leading in terms of performance, they are also critical enablers of some of the most transformative technologies of our time. Nvidia's venture into AI and machine learning has positioned it at the forefront of the next technological revolution. AI applications across industries such as healthcare, automotive, and finance rely heavily on the processing power of Nvidia's GPUs. The company's innovative approach, including the development of the Nvidia AI platform, continues to set it apart from competitors. This platform is becoming the gold standard for AI researchers and developers, further solidifying Nvidia's critical role in the tech ecosystem. Moreover, Nvidia's acquisition of ARM Holdings, pending regulatory approval, is a strategic masterstroke. ARM's technology is at the heart of billions of devices worldwide, from smartphones to servers. This acquisition would not only expand Nvidia's reach, but also integrate its cutting-edge GPU technology with ARM's processor capabilities, creating synergies that could redefine computing across numerous applications. This move signifies Nvidia's ambition to influence not just the high-performance computing market, but also the broader semiconductor industry. In addition to its technological prowess, Nvidia's financial health is a testament to its potential for sustained growth. The company has shown impressive revenue and profit growth over the past few years, driven by its strategic investments and market expansion. Nvidia's ability to generate significant cash flow and its commitment to reinvesting in research and development ensure that it will continue to innovate and maintain its competitive edge. As we look ahead, the convergence of AI, autonomous vehicles, and edge computing presents a vast landscape of opportunities for Nvidia. The company's strategic vision and execution capabilities make it well-positioned to capitalize on these trends. Nvidia's leadership in these cutting-edge technologies, coupled with its strong financial performance, supports the bold claim that it could become the most valuable company in the world. Understanding of market dynamics, its leadership in AI, potential ARM acquisition, and robust financials all point to a future where Nvidia could indeed rise to the pinnacle of corporate valuation. For investors and tech enthusiasts alike, Nvidia represents not just a leader in today's market, but a visionary company shaping the future of technology. Thank you for joining us on this deep dive into Nvidia's potential, and stay tuned for more insightful investing tutorials.